So, as I said, here we are back. Welcome back to Intra-Day FX Trading. As I said, I've done one session. I know my colleagues have done elements as well. And as I said, you can always find them in the archive. But, as we say, there's lots of people who are interested in whether they can trade FX markets on an intraday basis. They don't really know because maybe there's sort of conflicting or confusing information out there. And the important thing is that, it is possible, but, you need to be prepared, okay? Preparation is key. And it's crucially important to know when you know that sort of relevant news announcements are being made. That is both, formal news, okay, which you can find out from the economic calendar. There is an economic calendar on the Admiral Markets website, if you can check there. But really any sort of economic calendar, it's important that you're just checking to see what's actually going on with the relevant sort of news to the relevant instrument that you're trading that day. And although we're here to talk about intraday FX, that doesn't really, that could mean about anything with regards to whether you're trading FX indices, commodities, or even stocks on an intraday basis. It's important that you know what's the relevant news, the announcements that are being made. So as I said, today's session is going to build upon the first session, which is available on the Admiral Markets YouTube channel. And if you remember what we talked about there was it's about time to grow from thinking purely like a trader and time to start thinking is how would a dealer or a market maker operate within the markets? And once you start to have that little shift in your mindset, that can actually help you understand how FX markets move on an intraday basis. So if you remember, we just said we'd have a very quick recap on just one or two of the points we touched on in the previous session. So we talked about, all the players that are in the FX market, okay, and we looked at the market makers, the dealers, okay, the invariably the sort of big banks, big institutions that invariably help sort of oil the wheels of international trade. Then you have the corporate accounts, okay, in fact, what people forget about is in the FX market, the vast majority of deals, vast majority of players in the FX market are normally big corporates, big institutions that are just using that to effectively just ensure that international trade happens. Then there's the speculators who are ourselves. That might be, small private traders or hedge funds, big institutions. And finally, the big daddy, so to speak, in FX markets is the central banks and how they operate. And if you're going to operate in FX markets on any sort of time frame or any kind of sort of long-term basis, as in the timeline that you trade FX markets, you'll always want to have a little bit of an understanding about how central banks operate. So if you remember, we talked about, sort of the dealers, the market makers, okay? We talked a little bit about, what's their motto? What is it that they understand and how do they operate within FX markets? And, just two little pieces of information that, you can sort of lock away in your own brains, all right, is that the sort of dealers know that market moves are rarely one way, all right? Dealers understand that the majority of the time, intraday markets are range bound, all right? Around about 70 to 80% of the time. So just lock on that, just consider that, okay? Because we're going to be utilizing that little bit of information in a few slides' time to help us with our intraday FX trading. And what they also know is that, they never trust the first price. After a news release, dealers know that very often the first price print is the knee-jerk reaction of the market and very often wrong. Not all the time. Not all the time. There's no such thing as a 100% probability in markets, but generally, okay, very often we'll know that the first price print after news is the knee-jerk reaction of the market and can be very often wrong. And for some of us, once you learn to understand that, that can actually be very helpful, useful information that we can build into our own sort of trading plans. So what did we learn from that, okay? What did we learn from that sort of dealer's motto? Well, what we can learn about dealers is that dealers are always fading a move. So if you want to think like a dealer, then ABF, always be fading. All right. What does that mean? Well, that just basically means that, as price reaches out to sort of the extremes, okay, or the extremes of the price range for that day or for that particular session or after that news, well, then invariably dealers are always fading, okay? They will be basically, they'll be selling into up moves, they'll be buying into sort of down moves, okay? They are fading the moves, okay? So you have to, as I said, we want you to start thinking less like a just a normal trade and start to think about, well, who are the main players on the other side of our trades, okay? The dealers, the market makers, and they are always ABF. Always be fading, okay? So even if you just take that little piece away, that little nugget away from today, just to think about, okay, that when you're looking at intraday markets, which we'll hopefully have time to do, is that you want to be looking about, where is the opportunities to always be fading. So, what can we actually learn from that? Is that what we learn is that dealers only make money when orders are triggered. All right. Think about that. Dealers only make money when orders are triggered, because as market makers, that's their job. They're making markets. Okay. And so they only make money when orders are triggered. And what will happen is that they will always try and bully price towards wherever the biggest number of orders are. Okay, just think about that. Think about the implications for that in terms of where you look at a chart and how you look at a chart. All right, if you're very new to trading, okay, it's about start to think about, okay, well, if I know that they're always going to try and bully price towards where the biggest number of orders are, it would be useful for me to have an idea, okay, have an idea about where those biggest numbers of orders may be sat. So, because that might actually be very useful information to me as a trader. And that's what we covered a lot of in the last session, okay. When we talked through it, and as I said, please feel free to go to the YouTube channel or the Facebook group and be able to sort of watch that previous session to get a little bit more insight and depth into it. But, what we sort of came away with thinking is that, if you're thinking like a dealer or thinking like a market maker, we have to kind of change our way of operating from longer term trading, which is what a lot of what we've focused on over the last 12 months, certainly in the own sessions that I have delivered for Admiral Markets. All right. And as I said there about my own trading, okay, a few slides back, that longer term swing trading with trend follows, and that's me, okay. In FX markets, longer term, I'm looking to buy strength, sell weakness, and I'm looking to find a dominant trend and try and get up on it. But as an intraday trader, well, that's what that's where I switch, okay, and I flip. And as an intraday trader, I'm a mean reversion trader, okay. I'm a reversal trader, and we'll have a look at that in a few slides' time to understand that in greater depth. So, what we talked about last time was about, how to use highs and lows, okay? And that because we talked about how markets are still traded by humans. There's an awful lot of algo work, but even the algos are being programmed, by humans. And that, humans look at charts for usual places to do business. Remember what we just talked about in terms of, dealers are always, they get paid where most of the orders are. So they're always trying to bully price towards that particular area or zone. So what we looked at are things like big round numbers, BRNs, or previous highs and lows. And those previous highs and lows could be on a daily or a weekly basis. And those previous highs and lows start to become tradable opportunities. And this is especially on an intraday basis. And if you did watch that session, one of the tasks I set was to basically to go away and just draw in previous highs and lows on your intraday FX charts and just see how the market reacted, just to see, was it a place where the market either paused or it reversed, okay? Just starts to become it becomes an area that we start to take an increasing interest in terms of our trading. So, as I said, why are they tradable? Well, they're tradable because there are usually lots of stops there, okay? Usually lots of stop losses there on the other side of either the previous highs and lows. So they become very attractive areas for dealers, for market makers, because there's lots of orders where, and how do dealers get paid? Dealers get paid when orders get triggered. So that offers points for a mean reversal trade, okay? It's an ideal setup for a reversal trade, all right? And that's what we're going to look at today, okay? Some ideas at how we can turn that into trade opportunity. So, these are just a couple of slides that we have here, a couple of screenshots. And as always, we have an interesting, we've got our drawing tool here. It always helps, doesn't it? Just to see, and just, I was saying as a little task, just go away, draw in, okay, here we had, this was our high, okay. And the next day, what we saw was that, price sort of had it paused there, paused before moving up. And then it came back down, and then it actually made a huge shift up. But all of that was based around the previous day's high and low. And the previous day's low here, okay, and the following day, what we could see was that price actually came down just beneath it. Price came down beneath it, okay, before reversing and then making all of its way and its move up. The following day after that, price pushed up, okay, and on its first push up to the previous day's high, it actually fell down away. It actually fell down away before, I presume this was news, brought us up. But then even then, we came back down into that range, okay, we pushed up, okay, and was able to come back down into that range. And that's what we see, okay. As intraday trader, I'm a reversal trader, mean reversion trader, just looking for opportunities for when, price gets extended out to the edges, then looking for a way to sort of trade it back into the range. That's what I'm always interested in. So, as I said, every day we want to know how we can use this information. And as intraday FX traders, we want to know what, if any, major news is being released, okay, which is very important, as I said. You can always understand, there's no excuse for not knowing what formal news is coming out to that particular day. Economic calendar on the Admiral Markets website and all over the internet, all right? We also want to just make a note of where are the previous day's highs and lows. Also, the weekly highs and lows are very useful as well. And also any significant big round numbers. Remember, lots of people are, lots of humans are a little bit complacent, a little bit lazy. And so they start to, instead of looking at the chart in detail, they will just look at particular big round numbers. So in pound against the US dollar, okay, recently what we've seen was that, 120 was a particularly strong level, as it was the same level in the pound against Swiss franc, okay, and euro against sterling, 0.9, okay, 0.90 cents was invariably a big number, okay. Pound against CAD, 160, euro against dollar, 110, 111. So, these big round numbers become significant, they become important, and we can become interested in how the market reacts to that. And in particular, when a price reaches those areas, then we are looking for a mean reversion setup. That's what we're looking for. So any nice reversion or reversal setup, so things like a pin bar rejection candle, maybe an engulfing candle or a key reversal candle, or a double top or bottom, which might become even a triple top or bottom. Those are all kind of very suitable setups for when we're looking for a reversal or a mean reversion trade. Today, I'm just going to focus primarily on double tops and bottoms. We'll include one or two of the others, but we just want to focus on double tops and bottoms. You'll see that there within the archive, you'll see that there are already sessions there covering about how to trade pin bars or engulfing candles. I think there'll be one next month on trading key reversals. So it's a case of, please, feel free to sort of go into the YouTube channel or the Facebook page and be able to sort of utilize all of that information, that content that is there to help you. But today, we're just going to look at a version of double tops and bottoms, okay? And that will hopefully help you with looking at how you can find trade setups. So, a double top and bottom, and as I said, I always appreciate that, we have a broad spread of experience here in the room, but very often, as you can see there, okay, it's a double top, right? It's a reversal pattern where price will go down, and then we have a double bottom, okay, where we'll see price reverse to the upside. Not surprisingly, this is very often looked at as an M pattern or as a W pattern. I say this every week that you'll be pleased to know that my trading is far better than my artist skills. So I beg your forgiveness. I'm not a great artist, okay, but hopefully it'll be enough to help you understand the kind of concepts that we're discussing here today. So here is the way that I like to think of like double tops and bottoms, okay? And admittedly, I'm a sports fan, and one of my favorite sports is rugby. And why do double tops and bottoms appeal to me? What do I find them a useful sort of trade setup? Is because I like to think of it, okay, as as a little bit of like a rugby scrum, okay. There's sort of the two opposing teams, in our case, the Bulls and the Bears, batting head against each other, sort of fighting each other, okay. And in this particular, sort of analogy is that price, okay, is the rugby ball, all right. And what's happened is, as the scrum half sort of puts the ball into the scrum, the ball gets sort of knocked about left, right, and center, okay, between the two opposing teams as they try and wrestle to see who is the strongest. And it's a little bit, as I said, it's a little bit like the markets, okay. Price is getting knocked back and forth as the Bulls and the Bears are trying to fight it out to see who is more likely to win. And at some point, one team is likely to tire in the ball, or in case, price is likely to get pinged out or move in a particular direction. For us, what helps us, what gives us a slight edge, is that in that market, because price has already moved and probably moved into an overextended position before that double top or bottom pan, before the scrum has started, we're going to anticipate that the actual price action, the rugby ball, is going to get shot out in the direction of a reversal. So that's the way I like to think of it. That's why I look at how I look at the price action. You may have a very different view. You may have a particular, way you like to consider it. And that's absolutely fine. Absolutely wonderful. No problem at all. It's about sort of just trying to understand the way that you can understand this concept in a nice, simple manner. So you have a bit of a better idea of what is happening when the, when the market moves in its own inimitable style and way. So Vincenzo says, I find that decreasing highs and increasing lows are powerful indicators of what a trend may be, and that's absolutely right, Vincenzo. And we'll touch on a little element of that. Okay, we'll touch on a little element of that as what we talk about today. It has a little part of it, but thank you as always, Vincenzo. Thank you for your insight and interaction. So, there's probably a bit more data on here, or a bit more work than I would normally put in, but it just helps new traders understand what's going on. Okay, and that's as I said, those kind of double tops and bottoms, they're kind of very often referred to as an M or a W formation. And what we see is that we have, let's just draw on here, okay, is that very often that the first leg, okay, the first leg up is encouraging traders to go very long, and then price will reverse. Sometimes even here you may get like a rejection candle. Maybe there'll be a pin bar, okay, or something like that, which encourages the short sellers to start selling, okay. And these make the people who were buying here, they start to get a bit nervous, and then the short sellers go down, okay. Price retreats away from the highs, which encourages more short sellers to enter. And these late longs, okay, they're starting to liquidate because they're getting a little bit nervous. They think they're going to have a losing trade. And then, what happens is the short sellers just start to think that price is about to collapse. Well, then actually price makes a final push long, okay, for the second leg north. And this brings in, once again, people here who think that this was just a pullback, okay, and they start buying up here, okay. Now, on a good, let's say, M or W, price rarely exceeds, okay? It rarely exceeds the high of the first leg up. It can, and it might do, and there are particular setups there, but today we're just going to keep it quite simple, all right? Price rarely exceeds the high of the first leg up, all right? And so, those who first started, who started shorting here, okay, they may start to close out these positions there because they're starting to get nervous. So what we're just seeing is that actually price is just, it's like a scrum. It's a rugby scrum. They're just fighting back and forth, back and forth. Then price tops out here. It's very often, once again, this might be a rejection candle. This could be a rejection candle, a pin bar, an engulfing candle, a key reversal. And then what actually happens is price starts to sell, okay? And as what happens is here is the sellers join and the longs liquidate their position. If you remember, if you've been long, if you've been a buyer, what do you have to do to get out of your position? Well, you have to sell. So you've got new sellers, you've got old longs trying to convert to sellers, and that's basically what helps the price sort of start to shift its way down. Okay, and that's a little bit of an explanation. Okay, just to help you, for those of you who are completely new as to what is actually going on. As I said, I look at it as like a bit of a rugby scrum. There's a bit of a fight going on, but because I've seen price come into it from this direction, I'm kind of expecting there's a little bit of an edge that price is more likely to sort of shoot this way. Yes, it could still continue up, which gives me more information that the trend is strong, but more often than not, then actually we're looking for it price to reverse. That's what we're looking to happen. So if you're struggling, okay, let's, as I said, I'd like to try and keep these sessions as simple as possible. If you need a reminder, okay, of a double top or a double bottom, well, then open your left palm at the moment, okay? Clearly open it as wide as you can, and you'll be able to see a constant reminder of a double top or an M pattern there on your left palm, okay? Doesn't really work so well on your right hand, but have a look at your left hand. So from today onwards, okay, you should have no issues in being able to identify a double top pattern when you see one, okay, in the markets. It's there staring you in the face on your left palm. So take a look. And what happens is, I've always talked about this in all of these sessions that we've done here for Admiral Markets is that the importance of confluence, okay? The importance of confluence is that, what happens is when you see, patterns and signals in combination, that is what then provides us with our best edge for a trading pattern. So, you must look to consider, the price action where it is and the patterns. If we're seeing, an M or a W formation, a double top or a double bottom. Also the location, okay, is it happening at a previous high or low, or is it happening at a big round number? And for those of you intraday traders, which we might touch in future ones, as we're looking at things of interest in terms of like how far away we are from the Asian range, or was there a kind of a need for that sort of second move, all right, after some accumulation? And accumulation is just a fancy word for buying, all right, or collecting. And also, you might be able to use a confluence of the average to range, the ATR, which is something we'll cover in a future session. So as we said, when are we going to look to do this? When are we interested? Well, it depends. I appreciate, we've got a global audience here, ladies and gentlemen. So I appreciate that, you're all sat in, in fascinating places all over the world, and you'll all have your own particular interesting trading time frames. Just as an aside for intraday trading, okay, you want to keep it quite simple, all right? It's best for you to trade the relevant currency to that particular session you're in. So here, I'm sat in London. Okay, so the European session is my preferred session, and not unsurprisingly, okay, just during the preferred sort of session is there, you're going to be looking at things like the sterling pairs, the euro pairs, and the Swiss franc pairs, because as we can see here, GMT time, okay, from about 6 in the morning, 7 in the morning, that sort of first part of the session, the first part of the day is when you'll see the vast majority of those kind of pairs leading the pack, so to speak. Not unsurprisingly, the US dollar comes into its own in the afternoon in London, okay, which is the early morning of the US session, okay, which is basically what we'll see. And then for those of us who are joining us from Asia, well, which is overnight for me, well, not unsurprisingly, the case, then there's sort of the pound yen and the Aussie pair and the Kiwi will be leading the pack in terms of where they will be doing the sort of most of their business. So it's about recognizing where you are in the world, okay, and where that actually falls into play in terms of which currencies are the best for you to sort of focus on in your own looking at views for possible trade setups. So, let's have a look at some examples of this in action. So hopefully you can already see here, okay, is that we've got, here we go, just use my drawing tool as always, is that this is actually a 5-minute chart, okay, in the Kiwi dollar. And realistically, what we're looking at is, we'll look at focusing on maybe the 15-minute chart, but we can also look at the 5, the 30, and the 1 hour, 13-minute and 1 hour charts. All right. Remember we talked about right at the start about intraday FX trading, is that would be our focus. And, we're looking for trades that we can just really sort of look to open and close within the session. That's what we'd just sort of look at in terms of an intraday trade. But this is the Kiwi dollar against the Kiwi against the United States dollar. And what we can see here, and let me just move some of my panels here. What I've got here is, I've got a little sort of a tool, little sort of indicator that helps print out sort of yesterday's high and also the previous week's high and low. And what we can see is, what was in the Asian session for trading. So I would be perfectly tucked up in bed myself, but you can hopefully see here that, after price moved up, okay, price had a strong move up over during the Asian session. And then actually what we put in is we put in a nice M pattern there at the kind of yesterday's high and the previous week's high before price dropped it's all the way back down towards the medium of the range, back in towards the 200 period moving average. So it's just a very, very simple setup. It's very clear. What I tell people is just go away, okay? Just go away and have a look, okay? Have a look, draw on those levels of your previous weeks and previous days highs and lows, and just look at how price reacted at that. Doesn't always, okay? There's no such thing as perfection in trading, all right? But we're looking at extremes, okay? Where are the extremes of the market price of the previous day, because there's likely to be some stops there, and that means that the dealers, the market makers, they're going to be happy to sort of have a look at some trades there, and so they're going to be interested to see what's going on there. And so we go up there, and that's a nice rejection pattern there before we see price drop away. Okay, so be sure to sort of take a look at that and start to almost sear it into your mind as to what you need to look for as a trader when you're trying to intraday trade FX markets. And this is probably a more recent one, okay, here. This is just from like the last week or so, just week before. And actually what we have here is this, hopefully you can see there on the right, is that, this was pound against the dollar. This was the 120 level. I'm just going to draw on for days and weeks where price has been working its way down here, okay. Price has been working its way down, all right. And then actually what we saw was on this morning, I think it was a Tuesday morning, I think that we saw it, is that we had a very nice clear W pattern, okay, before price took off, okay. Price reversed there, okay, at that 120 level before it moved off. And I had a very nice trade here, okay, sort of trading around here, but and I got out for about 60 points, okay, about 60 pips of profit for myself, because it was an intraday trade. But if you were looking at the swing opportunity, that's gone up to about, as I think on Friday it closed up towards nearly at 125. So it's moved to like 500 pips from that big round number, because those big round numbers become very, very important. They become absolutely key. But for the sake of today, for intraday trading, all I need you to realize is that when you're looking at big round numbers, okay, or you're looking at previous day highs and lows, looking to see do we get to see rejection patterns like double tops and bottoms, or pin bars, or engulfing candles? These are the kind of things that are interesting for us, because they start to provide us with some opportunities to do our business. And this was just a sort of a little bit of a kind of an example here. Okay, this is the pound Swiss. Okay, here, just let me draw in. Just try to give a couple of different little examples of how we clearly had a big move up here, and actually sort of in the afternoon American session, it might be said we did a bit of an M pattern there before going into the overnight Asian session, where price didn't do much, but then it put in a little bit of a W before heading up to the high of the day, okay, which was the high of the previous day. My apologies. We put in a very kind of scruffy double top before price started to move its way down. Okay, we always like to see perfection on our charts. Everybody loves to see an absolutely sweet, perfect setup. But for any of you who've traded for a while, you realize that rarely occurs. It doesn't occur as often as we'd like, but what we have to be able to see is just to understand the idea, understand the concept. Okay, price pushed its way up, okay, to the previous day's highs, and when it did, well, then we actually saw a rejection. Okay, we saw a reversal there, and that's what we're looking for. All right, at previous highs and lows, whether it be days or weeks, okay, even sometimes months. Just looking at how does price react at that particular level, and if it provides a rejection, well, that starts to give us some information that we can utilize to help in our own trade decisions. And so this is, just an example here of, this is the pound CAD. This is, once again, this is about price kind of reversing at a big round number, right? Okay, here we had 160 pound against Canadian dollar. You can see yourselves here, okay, that, just move this out of the way. You can see yourself, price has been working its way down. And in this particular case, we broke out of the Asian session. And on the 1 hour chart, all right, this is the 1 hour chart. What we actually saw was, a pin bar rejection candle, okay? You can see it there before price operated its way up. But on a shorter time frame, you're looking down there on the kind of 1 minute, 5 minute charts, all right, it actually sort of drew itself as a little bit of an overextended W before it shot its way up there. But once again, it's just interesting to see, how does price react to those big round numbers? That's what we're looking to do. Okay, we just wait when price is nearby. It's almost as if these big numbers act like a magnet. Okay, and why would they act like a magnet? Well, because remember what we said right at the very, very start, ladies and gentlemen, is that, dealers only get paid when orders get triggered. And so they're always going to want to go where the biggest number of orders are. And quite often those orders are in places like previous days highs and lows, previous weeks highs and lows, and at big round numbers. That's where they become magnets, and price almost gets dragged there, gets attracted there, okay? And then invariably orders get cleared out. There's a rugby scrum going on here, okay? And we know that as prices come in this way, there's a good chance it's going to fire out that way, and that's what we're looking for to try and position ourselves to enjoy. So, as always, here's your task from today's session, ladies and gentlemen, okay? Go away and open any chart on an intraday time scale, 5, 15 minute, 30 minute, up to the hour. Then draw forward the previous day's highs and lows, all right? Just, there are indicators that you can get out there on the MT4 and MT5, okay? I'm sure you all know there's a plethora of indicators and EAs, but, if you don't have access to that right this moment, there's actually nothing wrong in actually just taking a bit of time to just use the trend line, just use the trend line pattern to just draw in previous days highs and lows, draw on any significant big round numbers, and just look at how price reacts when it reaches those levels. Just price per hour on through, which in itself is giving you some good indication of what's happening. There's likelihood of a very strong trend in place, and then that might be the opportunity to join that. Or does it reverse and revert back into the range? And if it does reverse, were there any significant price action reversal signals for you to alert you of that? Were there things like double tops and bottoms or engulfing candles, pin bars, okay, key reversals? And as I said, if you're not really too sure about things like pin bars, engulfing candles, etc., you'll find that there's plenty of content on the Admiral Markets YouTube channel and Facebook page that will help you grasp those understandings. Today, we just wanted to focus on a little bit more on double tops and bottoms. So remember, ladies and gentlemen, right, okay, intraday trading FX markets is possible. You have to be prepared, all right? And one of the things you have to do is be aware of like impending news announcements. And, 80% of the time, intraday FX markets are practically range bound, all right? So you learn how to trade reversal or mean reversion setups. And as I say, watch how price reacts around the previous day's highs or lows, or the previous week's highs or lows, or the big round numbers. And when price is in those areas, the double top or bottom formation is quite useful to be able to take a look at. And so we've got a few minutes left, so we'll just try and have a little look at live markets. A bit of an interesting day, a bit of a sketchy day because of what's going on with Mr. Johnson, Mr. Juncker, but we'll take a look in a moment. But before that, don't forget to join us next time, ladies and gentlemen. Okay, so on Wednesday, my colleague Marcus is going to talk all about indicators and oscillator. Are they a blessing or a curse? So, what are indicators and oscillators? All right, what should you use? When should you use each one of them? How can they be used together effectively? That's on Wednesday, September 18th, 2 p.m. London time. All right, so you can check your inbox for the webinar link, or you can go over to the admiralmarkets.com education part of the website and sign up for the live webinars. As always, you'll find there's lots of analysis and education on the admiralmarkets.com website. There's a plethora of great information there, including an economic calendar to help you be aware of news items. And as always, if you want to contact us, if you've got questions, if you're watching this, later on demand, you can email us at hello@admiralmarkets.com. Look at us at youtube.com/admiralmarkets or on facebook.com/admiralmarketsglobal. So I hope you found that useful. I hope you found that insightful. I hope it helps just take you just a few steps forward in your understanding of how to intraday trade FX markets. As always, if there's interaction, then, or if there's questions, please feel free to fire them away. We'd really appreciate it if you would be good enough to sort of fill in, complete the poll that my colleague CMAC has just put up there for us to look at. And as always, if you have ideas about future content, what might be of interest for you to cover, and I know one or two of you put ideas in there, we really do appreciate it. That's really great of you. But as I said, we've got a couple of minutes left, and if you'll bear with me, I'll just try and switch across to the Admiral Markets MT4 Supreme Edition platform, and we'll have a quick look at maybe what's going on sterling today. Okay, so hopefully you can still see my screen. Hopefully you can still hear my voice and see me there. Okay, and we'll have a little chat about now. As I said, sterling's been an interesting day. Okay, sterling in itself has been very sentiment-driven trade over some might say over the last 3 years, but definitely over the summer period. And what we've had today, of course, is Mr. Boris Johnson speaking to Mr. Juncker, not hitting Mr. Juncker. I don't think it's come to that yet. But what we have is him talking about there and speaking that. So, of course, there are always knee-jerk reactions to that with every little bit of news or every little bit of hint of what's possibly been going on. And I'm just going to look at, of course, that has an impact on the euro sterling rate, okay, today. So let's just have a quick look and see if we can see what's going on there. So we'll just have a quick look. Okay, we've got a few minutes, a couple of minutes here. So euro sterling, what we're particularly looking at is, I'm kind of interested here, is that if I just bring on my cursor, you can see that actually, basically it's been a euro sell-off sterling move. We can see that what I have here is, as I said, it's just a couple of indicators that help draw in previous days' highs and lows. And interested in what we're looking at here is prices just this morning. Okay, this is the sort of Asian range here. Price this morning popped up, and then what did we see there? Okay, even though it was at nudging its way back up towards the kind of 89 level. Let's just draw that in there, which isn't as I wouldn't necessarily say that's as big a number as the 90 number. Okay, but we can see that it was a round number. Okay, and what do we see there? But what do we see there? But price actually moved up there and put in an M pattern there. Okay, hopefully you can see that double top before it moved its way down. And now, okay, it's hit the sort of previous day's low, previous week's low, and it's just come back there. And I'll just be watching to wait and see. Could this actually sort of drift its way up? In which case, then we have a double bottom, a W pattern formation, which might give us an idea of a possible trade. So I'm just going to be looking at that, keeping an eye on that for this afternoon. As I said, we've got Mr. Juncker sort of, their sessions today, so it could be quite volatile, right, around that. So I'd be very, very, very careful, very wary of just. But you can see hopefully there how clear that is in their sense that that we've got this double top M patterns, okay, and the W pattern hopefully forming. That's what we need to sort of move its way up there before I become interested in that. So, but as I said, I'll be keeping an eye on that for the moment. And I'll just very quickly look at maybe just one more, just to give us an idea and just to finish off, because I appreciate, as always, there's always plenty of time here, okay, or rather, we've always got shorter time trying to sort of share as much with you. So let's have a look. What have we got here that we could have a look at? So pound yen. Let's have a look at pound yen. Okay, and pound yen. You know, this is a move off a particular level here. So here we go. What are we interested in? If I just put it up to the hourly chart and zoom around a bit. You know, and what we can see is that, you know, you can see how price reacts to these levels. Okay, it's interested around those levels, and you know what we were looking at as a trade just a couple of days ago was being able to go just here. I was just looking here around the kind of what we saw on the 10th September was that price sort of pushed out of its range there. Okay, price pushed out of its range, and then you know, just quick draw, price pushed out of its range before it was flattened back. Okay, back down to the kind of 132 area here that we saw here before it put in a bit of a scruffy W pattern. Okay, as I said, they don't always look perfect, I'm afraid to say, ladies and gentlemen. We always want perfection, but that's not always the case. Before actually price started to move all the way up there, okay, to about the 133.40 level. Okay, but as I said, I just wanted to show you that you know, once again, a sort of a big round number, we get a bit of a move, and it's a case of actually just trying to understand that, you know, we get these double tops, double bottoms at those areas. That's what we're looking for. It's not always pretty. It can be scruffy, but with a bit of practice and effort, you'll be able to start to identify these opportunities. So there you go, ladies and gentlemen. I hope you found that useful. Hope you found that an interesting session. As always, please put your comments in on the YouTube channel, or just email them across to us. We always love that, and we look forward to speaking to you, my colleague Marcus, on Wednesday afternoon. Trade well, ladies and gentlemen.